Hey guys, good afternoon. It's Brett with Numbers Up Finance. Today we're doing a market wrap for Wednesday, April 17th. Taking a look at the S&P futures here on the daily chart. We have a decent sized red candle today after a few previous days of, some flat trading and what looks like a consolidating topping pattern. This is kind of the first day of some selling. Now this is the future, so this isn't the actual officially traded chart during the day. The opening of this red candle is going to be what happened last night after close. It's not what the market opened at today, technically. This big wick that we see to the upper side is actually where the market opened today during normal trading hours, so this realistically is an intraday sell-off much bigger than the candle you see. If I'm to put a number on that, I'd say somewhere around 0.7%. Definitely something more substantial than we've been seeing in the past few weeks. Now, taking a closer look at this top, we see that at a price of about $29.27, pretty similar to the top back here, the consolidation that we saw, back in September over here before our total tops, our uppermost tops in October. That's pretty much the price that we've consolidated off here, the resistance that we've played off of. So it's definitely something important to be paying attention to. Back in September here, you see is where we made, this is where we made the highest point in the MACD that led to the divergences that played into our sell-off through October. Over here, present day, we still have some divergences in play, so definitely something to pay attention to. MACD making lower highs while our prices are still, setting higher highs. The divergences are still in play from February. See, we have our highest highs in the MACD, and we've continued to make higher prices. If we pay attention to just our last two MACD spikes, the momentum spikes here, it's pretty much flatlined, and we still are making higher prices, so it's not even a failed divergence there. I wouldn't make that claim. It's more so just a weaker divergence in play here in the shorter term, but definitely still, for the bearish case, those divergences. So, moral of the story, the daily chart is hinting at some bearish patterns and indicators right now, so we'll pay attention to see if those pan out. Switching over to the hourly chart. Sorry, my SMAs look ugly. That's just how the Thinkorswim, this program, puts those studies out. This is the 50-day and the 200. We can see how we've traded over the past 2 weeks on this hourly chart. You can see this sell-off has been the highest volume, we've seen in, since this is like 2 Fridays ago. A higher volume sell-off that makes it a little bit more substantial. So it's definitely playing into the bearish case a little bit. Volume definitely has a lot to do with the sell-offs. A volatile sell-off is definitely something more substantial than any minor sell-offs that we've seen. For example, back here Tuesday, it was a low volume, and then we panned out to make a little bit more higher prices. There was still more gain to be made there. Definitely our highest volume one so far. Still relatively low volume if you were to compare that to something we saw back in October and December during those major sell-offs. But definitely a bigger indicator for the bears here. So just to entertain the bullish case here in the short term, if we zoom in on just today, how the hourly charts traded, just this section, we see a pretty big sell-off in the morning where we consolidated towards the bottom. If we were to draw like a support and resistance for the hourly trading today, the resistance is significantly more sloped and steeper than our support is, which is pretty much a flat line. This is a falling wedge pattern, same principles as a rising wedge pattern. It's indicative of a bottoming pattern, but again, I wouldn't give this too much merit, as it's just an intraday pattern, and it could just been a support that we see today. You never know though. There's nothing for sure in the markets. So this support could pan out to be something a little bit more substantial in the long run. If that's not to be broken in the next few days by the end of this week, then maybe it has a little bit more strength than it made it out to be here. definitely something to be paying attention to. Going back to the daily chart, I discussed these significant. I'll delete those. I discussed these significant price levels a little bit earlier in the video, but still to entertain the bullish case, this high that we're meeting here on Wednesday, there is again the same high made in September, which proceeded to make a couple more highs. So if that pattern is to repeat itself now, even though divergences weren't in play at this point, the divergence was actually set when these highs were made. We're currently at divergences here, so I think it's a bit weaker case for those new highs to be made. But just to entertain that bullish case, there is the last time we had reached this price level, there were more highs to be made in the following months. You see, we made 2 more highs before we finally actually sold off, and those divergences played out. So just something to pay attention to. There's obviously so there's certainly a case to be made there for a bullish swing here in the short term. However, to sum up real quick, everything that we've gone over, those divergences are still in play from February. We're still overextended from these lows from December. The risk reward is, substantially in favor of the bears. So definitely a lot to be paying attention to in the market. So keep tuning in every day. We do these videos daily at the end, right after the market close. We got a lot of important information we cover each day, so be sure to keep tuning in. And there's a lot to be going over for this bearish case in the future. And if there are any bullish cases in the future, we'll see if those eventually outweigh those long-term bearish cases. So hope this video was helpful. If you guys liked it, drop a like, subscribe, comment for us. That helps us know we should keep doing this, and it helps out our channel. So get your numbers up. Have a good one.